TheoTrade. This is Don Kaufman. It's August 28th, 2019, and you are watching the TheoTrade evening video. 10 minutes left inside of today's trading session. The S&Ps are up some 22 points. That may sound like a fairly substantial move. Nevertheless, inside of a lot of the volatility we've seen lately, well, let's actually snap out here to a daily chart. You see exactly what I mean. These have actually been fairly muted trading sessions. Nevertheless, there's a few very detailed ideas that I want to kind of drive home for trade that you can expect kind of come into a theater near you, well, inside of the next about 48 hours. So we all have to recognize that, well, we're coming into a holiday weekend here in the United States. Labor Day is already here. So this is when a lot of traders, maybe you think that they kind of get off their game, they back away a little bit from it, okay? But everything on the screen right now does not point to that. Let me actually get into some detail. All right. One of the first things that I want to point out is these levels that we're actually terming Volatility Box. Now, this isn't the first time here at TheoTrade that we've talked about what we kind of call trapped inside of a Volatility Box. In fact, if you actually look back, I'll actually pop back to a yearly, right in this neighborhood back here, which is we dropped into it in October. We actually sat in it all the way till, well, early December before kind of breaking the bottom of that volatility box. But right in here, we actually kind of dubbed that. It was, well, what we called the hurt locker. This was just a volatility box that we got inside of, okay, and pinged back and forth before eventually cracking to the downside. Anyway, we're in a similar situation right now. Well, the volatility box kind of prevails, but you really have to kind of gauge for how long. Well, maybe I'll be able to answer that here momentarily. All right, let me take this down to a 30-day 1 hour. Okay, in a 30-day 1 hour, we're just going to establish kind of what this range really looks like right now. Here we are for the entire last month of trade, okay, inside of a range that, roughly speaking, kind of drives us anywhere from, we'll call it about 29.40 to the upside, somewhere in the neighborhood of about 28.20 to the downside. Again, kind of fast and loose on that range, and you'll see that we are dead smack in the middle of this particular volatility box. But there's a few really critical points to kind of be made on this front. One of the first things that I want to display to you is that, again, I'm going to snap back to a daily chart. Well, over the last, few trading sessions, specifically this last 3 days, Monday, Tuesday, Wednesday of this week, okay, we have recovered after the big sell-off last Friday, which is 70-point down day. We've actually recovered a little bit, right? So the marketplace bounces back. It's got pretty much half the losses back from last Friday's sell-side activity. However, at the exact same time that the marketplace is recovering, take a look at something like, well, volatility futures, okay? So let's once again, the volatility future should be a little bit inverted. Here's actually the big down day. Okay, yet if you take a look at volatility, it kind of refuses to really back off much at all. So the volatility futures right now are an indication that, hey, traders are not per se getting off their game. Now that's not, one thing per se we're going to look at here to make a determination. Nevertheless, it really stands out. What also stands out is when you start looking at the volatility futures themselves. Listen, 21-day volatility futures, they're at 1955. You actually jump out then to the 49-day volatility futures. They jump up to about 1980. So here we have short duration volatility futures ever so slightly below the longer duration volatility futures. But then when you go out 84 days, we're still in a backwardation. Okay. In fact, when we go out even further in time, there's a fairly substantial backwardation. That is, the 49-day vol futures are still exceeding, for example, the 112-day, which are still exceeding the 147-day. So the volatility right now, okay, is still in a phase where it's saying, hey, watch out, I can get dangerous at any moment. Now, again, that's just reading a little bit specifically into the volatility futures. Okay, the VIX is in the, the same kind of category over here. It's the same type of animal where the VIX took off last Friday and it hasn't really contracted much. And when you see a 21-point move to the upside and that the volatility futures are only down, negligibly, or that the VIX is down, less than a point with a 22-point move now to the upside, you kind of put a big question mark after that, okay? along with that, the NASDAQ today has kind of failed, okay, in terms of creating any type of blistering rally. The NASDAQ is actually weak on a relative basis. This rally today is brought to you by none other than, well, the financials, okay? And even those, as this day has progressed, and again, you got to come all the way down to like, the intraday chart, has faded ever so slightly on the trading session. We're still below the 26 kind of 50 level. So now you have the financials below the 2650 level. You've got the volatility futures that are still, okay, in the back month, still in what we term backwardation. Cruise to the bottom of the screen over here. Take a look at the VVIX, the volatility of the volatility index. Listen, there's still traders net buying volatility. Why is the VVIX only down some 2%? It has everything to do, again, all of these kind of come to confluence to describe that this volatility box, what it really is, okay? We're just getting wound up in here like a little top. It is dangerous right now, okay? The problem with this, though, is I know that immediately when I mention it's dangerous, people are going to think to themselves, oh, we're going to break to the downside. Listen, there's so much negative bias right now that a big portion of me kind of believes that we do have, okay, at this point, kind of that the propensity to break to the upside, at least in the very near term, just based on, again, the sentiment out there. It's hideous. Everything you hear is bond this, negative interest rate that, and you're just waiting at this point for what? The global economy to erupt into flames, the S&Ps to tank, but in the very near term, again, we're wound up like a top inside that volatility box. One last thing that I want to kind of comment on before I let you go on tonight's update, and that has everything to do with the expected move on the week. Now, I'm going to close up this left side bar over here because the futures, we're over and done with, right? We're going to have an up day, but it's kind of a mild up day. Now, one of the things I want to point out is right here. This is the expected move, the week at large. It's, of course, this week's expected move. And for those of you, if you did not necessarily tune into the weekend video, the expected move this week was a whopping $70. $70 higher, okay, or $70 lower. $70. How much movement have we currently had? Again, this was the starting place on the week. It's just shy of about 28.50, okay? Right now, where are we? About plus 40. There's a whole lot of room in here, people, for movement. Now, the reason that I am kind of spending some time on this, and I really want to delineate this point, is, listen, okay, you have a $70 expected move, okay? In almost every recent occurrence, okay, week-to-week expected move. For example, look at last week. We pretty much tagged the edge of the expected move. The week before that, we broke outside the expected move. The week before that, broke outside. The week before that, smashed the expected move. The week before that, smashed the expected move. Smashed the expected move here. Okay. This week, almost touched the bottom and the top of the expected move. We touched the top of the expected move here, touched almost the bottom of the expected move there. Listen, I can go back again and again and again. And really, in some of the recent history, there's only been 1 week, all right, we didn't fly to the edge of one of these expected moves. So you need to be thinking, all right, everybody's like, oh, it's coming into a holiday weekend. I'm going to pack my bags. I'm going to the Hamptons. Please, all right? Algorithms, they don't have to pack their bags. And when you start looking at a $70 expected move, and at this current time, okay, what have we really done? Huh? Have we moved even 40 points to the upside? And the answer is, yeah, kind of. We've had this meager 40-point move. You got room, people, room to the upside and massive room to the downside. And I'm telling you, okay, in recent trade, it has not disappointed at all. In fact, when you start looking back at the SPX, there's just 2 days left to the expiration here inside of the SPX. We're still projecting almost a $40 expected move. Don't take my word for it based on, some statistics, if you will, of, well, we could move to the edge of this line or this line. This is the expected move. This, okay, is what you're dealt this week. And right now, okay, the marketplace is still indicating a 19% volatility. Effectively, what are we saying? Get ready to rumble because we're going to move. There's the closing bell. Thanks, everybody, for coming here to TheoTrade. Have a wonderful evening. Bye-bye.